important questions that is related to your ratio analysis, because now your exams are only 2 to 3 days left, and this is a time when you should just focus on whatever you already learned. Okay, so this is a very special session where you will understand some concepts that is related to ratio analysis chapter. And this chapter is very important, if I say from the exam point of view, because from this particular chapter you will get 6 to 8 marks questions. Okay, and some questions are of the 2 marks and some questions are of the 1 marks, and so that's very important from the exam point of view. So I hope everyone is preparing very hard for this 27th examination of your accounting paper. Okay, while 26th, which is scheduled for the PPP exam, I hope everyone is preparing very well for these exams. Okay, so let's start the session. One update also from our side, that is you will get 22% off all JAB and CAIIB product that is related to mock test, ebook as well as a test series. So you only have to apply the code that is Y422. With this code you will get 22% discount on the mock test, ebooks as well as the test series, because that all are very necessary for just clearing your examination, or say that are very just understand that are very important for your better understanding for accounting exam. So just start the session with the first question. So the first question that is related to the current ratio from the following information of the ABC. So in this like you have to just find out the current ratio and the following informations are given. So first thing that you always have to understand, whenever you will find the question related to current ratio, you will also have to know that what is the current asset and what is the current liabilities, okay, for calculating the current ratio. Because in the exam, like many terms, like many particulars are given for a company, like cash are given, debtors are given, okay, account receivables are given. So there are many terms are given, and you just have to know that what is the current asset. So the current asset that you can convert into cash within a 1 year. So whenever we are talking about for the current, that means we are talking about for that within a 1 year. And whenever we are talking about for the non-current asset as well as the non-current liabilities, that means that asset which we can convert into cash beyond 1 year, or say after 1 year. Okay, so that all asset just known as a non-current asset. So non-current asset like your fixed asset. So in the exam there are many particulars may be given, but you only have to just follow your concept for ratio analysis. Like you never have to memorize the ratios formulas in the ratio analysis chapter, because the all the ratios just you have to just understand that what it means or how you can formalize the ratio. Okay, like the current ratio that is equal to the current asset and it is divided by the current liabilities. So like if we are talking about this particular question, so like in this question current assets are given, total liabilities are given, and non-current liabilities are given. Okay, so if I say that is current asset which is given, but we have to just understand how we can calculate the current liabilities. Okay, so one thing you have to understand, whenever we are talking about the current liability, that means because total liability that is equal to your current liability as well as the non-current liability. Okay, so if we have to calculate for the current liabilities, so we know that value of the total liability as well as the value of the non-current liabilities, like the value given here. So sometimes in the exam, like the term that also can be given, like total debt. Okay, so either say debt or say liability, both are same. So total debt or liability, or say non-current liabilities or the debt, right? So if I say what will be the value of the current liabilities, so the total liability that is given 75,000, and we have to calculate the current liability by non-current liabilities that is given 50,000. So your current liabilities that would be 25,000, right? So that would be your current liabilities. So from these particulars we can easily calculate the current liabilities. So what is the value of the current ratio now? Because the current asset that is 1,50,000 and it is divided by the 25,000, so that would be equal to your 6:1, or say 6 times, right? So that would be your answer. So the answer that would be 6 times. Okay. So this is how we solve these kind of the questions. So in the ratio analysis, the only thing you have to understand the differentiation, like what is the current asset, current liability, what is the inventory, what is the proprietary, what is the debt, what is the equity. Okay. So you have to know the exactly terms. Okay. Next question, that is now again you have to calculate the current ratio from the following information of the company that is given. So cash is given, debtors are given, inventories are given, current liabilities are given. Okay. So you have to just calculate the current ratio from these particulars. Okay. So how we can calculate the current ratio? So the formula for the current ratio, that is equal to the current asset and it is divided by the current liabilities. Okay. So if I say what is the current assets given here, like cash is just cash is our current asset, debtors is our current asset, inventories is also our current asset. Okay. So and while the current liabilities which is given here, that is 25,000, so that would be our current liability, right? So now if I say what is the total value of the current asset, look, if I talking about the current asset like cash, debtors, account receivables, okay, account receivables, say inventories, either say inventories or say stocks. Okay. So prepaid expenses, like that expenses you already paid, prepaid expenses, advance tax, so that all just comes under the current asset. You have to just understand that all comes under the current assets. All right. So now the particulars are given like in the previous slide. I am just talking about this. So current asset, the value that is given 50,000 plus 25 plus 25. So that value will be equal to your what? That is 50,000 plus 25,000 plus 25,000. Okay, so that will be the total value of the current asset as well as the current liabilities value that is given 25,000. Okay, so the answer that would be your, just calculate this. This will be the 1 lakh and it is divided by the 25,000. So your value would be 4 is to 1. Either say 4 is to 1 or you can also say that that is a 4 times. Okay. I hope it is understandable for everyone. So whenever we say that is a current asset, so you have to know what the components comes under the current asset, right? I hope it is understandable and everyone is giving the correct answers. That's very good. Another question, that is here you have to calculate the quick ratio from the following informations. So now the cash is given, trade receivables are given, inventories are given, prepaid expenses are given, current liabilities are given, right? So either say quick ratio and or say the liquid ratio, because quick ratio is also known as another name, that is liquid ratio. This is very important thing to understand. Okay. So those asset which is not the quick asset, that asset cannot be a current asset. Just understand that is total asset, and total asset, that is the current total asset which is made of the current asset as well as a non-current asset, and the quick asset which is a part of the current asset. That means that more liquid asset that you can just convert into cash as soon as possible. So that asset is known as a quick asset, right? So in your exam point of view, like you only have to just exclude inventories, and your prepaid expenses. Inventories and the prepaid expenses you have to exclude for quick asset. Okay, for to just determining the quick asset, you have to exclude the inventories, prepaid expenses, and or say advance tax, right? So you have to just exclude this for calculating the quick asset, right? So if I'm talking about how you can solve the quick asset, so quick ratio, so we know that the formula, that is quick ratio, is equal to the quick asset and it is divided by the current liability. Because in the liability case, we just assume that we have to pay all the liabilities. Okay, so for a company there is a no in accounting term we just assume like quick liability that is equal to the current liability, because we have to pay all the liabilities from the company point of view. Okay, so that's why we just include the current liabilities in case of the quick liability, in terms, or say instead of the quick liability, right? So if I say how we can solve the quick asset, so cash is given, so cash is our quick asset, so just write here cash plus trade receivables, that means the amount that we have to receive from our debtor, so that is known as your trade receivables, or say account receivables. Okay, either you say account receivables or say trade receivables, right? After that, and inventories are given. Inventories is not the part of the quick asset, so we just exclude this. Another term that is given, prepaid expenses, that is also not included in the quick asset, right? So the only two components that comes under the quick asset from the given particulars, so the cash, that is 65,000 plus 25,000 rupees, so that will be equal to your 90,000, right? So that will be your quick asset. While current liabilities, that is already given 18,000 rupees. So now if you have to calculate the quick ratio, what will the value here? That is very obvious to understand, that is 90,000 and it is divided by the 80,000, 18,000. So the value that would be 5:1, or say 5 times. So that would be your answer for this question, right? So this is how we just solve these kind of the questions in the examination. I hope it is now understand now clear. Okay, so in the exam, like sometimes the question is about just calculate the quick ratio, or say the question is about just calculate the liquid ratio. So you have to understand both are the same meaning. Okay, next question. Next question, again, you have to calculate the current ratio from the given information. So the cash is given, trade receivables are given, inventories are given, prepaid expenses are given, and the current liabilities are given. So just tell me what will be the answer here. Just calculate and tell me what is the answer of this question. I'm just waiting for your answer. I hope now everyone just able to just do this kind of the question. So, if I say that is current ratio, which is equal to your current asset and current liability, and I say that is cash is your current asset, trade receivables your current asset, inventories, inventories your current asset, but not a quick asset, prepaid expenses your current asset, but not quick asset. Okay, while current liabilities are given. So for this question, if I say that is current asset, which will be equal to your 65,000 plus trade receivables, which is 15,000 plus inventories, which is 25,000 plus prepaid expenses, which is 25,000, and just add this and you will get the answer. So what will be the answer here? That is also 65,000. So what will be the value here? Just calculate and tell me. That will be the 50,000. That would be 65, and this is again 65. That means that would be the 130, 1,30,000, isn't it? And it is divided by the 65,000. So what will be the value here? So your value would be the 2:1. Either say 2:1 or say 2 times, right? So your answer, that would be the 2:1. I hope it is now clear for everyone. Okay, I think everyone has done this question. Okay, next question. This is also very important question, because many times in the exam you will just see like debt equity ratio you have to calculate. So like I always said that in the ratio analysis chapter, you do not need to memorize any formulas. Any formula you do not need to memorize. You only need to formalize, like how you can just formulate the ratio given. Like if I say that is this is a question of the debt equity ratio. Okay, so if I say debt, okay, and whenever we are talking about the ratio analysis, like like investor or say financial companies, just use the ratio analysis for and for better understanding of for the companies. Okay, so if I say the term that is debt equity ratio, that means that is directly related to your long term debt. Okay, so either say long term debt or say long term liabilities, right? Both are the same, and it is divided by the equity. So equity, that is related to your what? That is related to your shareholders fund. equity that is related to your shareholders funds. Okay, so whenever you just see the ratio like debt in the ratio analysis chapter, you always have to understand that you have to just consider the long term debt or say long term liabilities, right? And it is divided by the shareholders fund. Now the thing is, like long term liabilities you have to just calculate, and in the question that is non current liabilities, other long term liabilities are given. So long term liabilities, what we understand by the non current liabilities, this is actually just understand as a long term liabilities. Okay, so long term liabilities, that is your non current liabilities. Okay, so that's why another statement, that is other long term liabilities. So if I say that is because as I always explain you, total liabilities that is equal to your current liability plus non-current liability. So if the non-current liabilities that is given here 4 lakh, so just write 4 lakh plus 40,000 rupees, that all are the part of your long-term liabilities. Okay, that all are the part of the long-term liabilities. So this is also non-current liability, this is also non-current liability, and it would be divided by the shareholders fund, which is divided by the 2,20,000 rupees. So now if I say what would be this value, that is 4,40,000, and it is divided by the 2,20,000. So the value that would be again 2:1, right? So that would be your answer here. Either say 2:1, or you can also say that two times, right? I hope it is understandable for everyone. So you know how simply we can solve these kind of the questions in the exam. Like I just explain you, whenever you just see debt, you have to understand there is a talking about the long term debt. Okay, we always interested in just searching for the long term liabilities for any company. Okay, or not a short term liability. So that's why we just include the long term liabilities, as well as it is divided by, because the equity term given here, so that's why we use the shareholders fund. Okay, so that's how we just solve these kind of the questions in the exam. I hope it is now clear for everyone. Okay, now another question, that is here you have to calculate the proprietary ratio. Okay, so what we understand by the proprietary ratio? Anyone can tell me what we understand by the proprietary ratio? Look, this is just type of the solvency ratio. We read this ratio in the solvency ratio, and that is useful for determining the amount of the contribution of the shareholders towards the total asset of the business, very easy to understand. Whenever we are just talking about the proprietary ratio, that means we are just talking about for just understanding, like determining the amount, that is also determining the contribution of the shareholders towards the total asset of the business. So that is known as the proprietary ratio, and this is a ratio from the solvency ratio. So the main purpose of this ratio is to determine the proportion of the total asset of a business that is funded by the proprietors. So that is known as the proprietary ratio. So now understand what is the formula of the proprietary ratio. This is very obvious to understand. That is the what is the exactly formula for the proprietary ratio. So like I say, that is shareholders fund, so that will be equal to shareholders funds, and it is divided by the total assets. Okay, because it just describe, or say it is just determining the amount of the contribution of shareholder towards the total asset of the business, right? So now the shareholders fund, which is given 15 lakh, so just write here 15 lakh, and it is divided by the total asset. So total asset in this question, like fixed asset is given, that is 1,50,000. Long term investment are given, that is given 3,50,000 rupees. So if we are talking about the total asset, that means we have to just add both the asset. Okay, So if we just add this 1,50,000 plus 3 lakh, 1 minute, plus 3,50,000. So what will be the answer of this question? That is 15 lakh, and it is divided by the 5 lakh, right? That would be equal to 3 is to 1. So your answer, that would be 3 is to 1. So this is how we solve these kind of the questions in the exam. So okay, so that's all for this session. I hope this lecture is useful for you. And if you're liking our effort, please do not forget to hit the like button on this video. And you know, this ratio analysis chapter is very important in the terms of the examination. So whatever the things I explained in my lecture and whatever the important things I explained, just write down on your paper and just revise that, because all the sessions I have taken here, that all very important from the exam point of view. So just revise through the videos as well. And if you have not downloaded the Adda 247 application, just download this and subscribe the Officers Adda 247 YouTube channel, so that you can get the notifications of the live sessions as well as the notifications of the important news that is related to your examination. Okay, so thanks for watching me here. Thanks for joining me here. If you're liking our effort, please do not forget to hit the like button. Okay, and share this video to your friends, so that maximum number of the colleagues can join with us.